Hey everyone, it's Monday evening around 6 o'clock, and this is video number 507. It's your closing comment today on Monday, and it was quite a day. The announcement well before the open that Pfizer and Biontech's BTNX had a 90% effective COVID vaccine. Um, that's a pretty remarkable number. Dr. Fauci was saying that 50 or 60% to get started would be a monumental gain, and here we are at 90%. Pfizer was up about $5, finished the day at 39.20, and that was up 280 or 7.7%. BTNX was dramatically higher. It closed 104.80, up 12.80 or 13.9%. And when I say it was up more substantially, I'm only talking about on a percentage basis, because BTNX is minuscule compared to Pfizer. I only have one problem with this. It's very exciting and everything, but take a look at Biogen IDEC. The FDA Biogen IDEC came out the beginning of this year and said that their Alzheimer's drug was going to be positive. Then a couple of months later, they said it's not. We're going to stop trials. And then they turned around a week or so ago and said the FDA has said we should continue the trials, that the results were strong. And then today they came out yet again and said the FDA said no. So the stock, which has been a yo-yo from 150 to 350 actually, closed today 236 and a quarter. That's down 92.64 or 28%. So as exciting as this new virus vaccine is, it's not in stone. And frankly, there'll be ups and downs in it, and it will also take quite a while till it filters down into the public. Okay, McDonald's double beat earnings and revenues. Stock traded from about 216.50 on Friday's close up to 227.85 after the open, then all the way back down to 213.22, down $3.34 or 1.5%. There was some talk that they were doing a plant-based group of products, and everybody assumed it was their own. It turns out it was Beyond Meats, and so that gave Beyond Meats a little bit of a boost. But then they reported earnings, or specifically not only lack thereof, but a much bigger loss. The stock, which in the last couple of days has gone from a high of 197.5 down to 141, traded in the range today of 170 to 105.06. The last is 115 down 41.86 in late trading. That's down about 28%. So now we get to really the meat of the day and what it actually means. And I'm kind of going to disagree a little here with most of the teleprompter readers, because I think that they're wrong focusing on what they are. So the airlines were up anywhere from 10 to 20%, 10 to 20%. With the exclusion of Hawaiian, which had a special situation there, and that was up 48%. The cruise lines were all up about 30%. The booking, like booking.com, was up 300, and that was 18%. And Win, which had decent numbers a week ago, but kind of was all caught up in this, was up 27% today. As far as the stay at home, work at home, etc., Zoom, which came down from 500 to 432 pretty quickly, traded as low as 402, closed 419.46, down 81 or 16%. Simon Properties, on the other hand, had a range of in the low 70s. There's a mistake on the chart, so that's not an accurate one. I'll just tell you where it closed, and that was 74.76, and that was up 12.90 or 22%. On the other hand, a lot of the stay-at-home stuff that has been higher came down even further. DocuSign, which traded 253 days ago, closed the day today 202.45, down 29 and a quarter or 12%. Peloton, which just came down from 132, hit 94 today, closed 101.82, down 23.64. And Planet Fitness had a nice move. It made a low recently of 60, and today had a range of 77 to 86. And as good as it was up 1088, but it closed at 7802, and that was up 16%. My feeling about this is that we have a stress test for the banks. My contention right here is that we've undergone a digital stress test, and the companies involved, the DocuSigns, the Zooms, etc., passed with flying colors. Not only did they pass, but I'm not sure how many people are actually going to want to go in to work to their offices. And frankly, it seems as if the productivity is tremendous. And so, why would they want to move away from these things? I mean, they're convenient, they're low or no cost, and they perform beautifully. So I think that I'm watching for a lot of these, the Zooms, the DocuSigns of the world, to pull back a bit, and I have to be a buyer. We are nowhere near done with this pandemic. We're coming into the worst part of it. Cold weather, staying indoors, families home for holidays. I personally think it's going to be a mess. Okay, so the Dow closed up 834 and change, up 2.95%, and the internals were 4-1 up. The NASDAQ, after being up about 230, I believe, possibly a little higher, finished down on the day, down 181 or 1.53%. The S&P, which I know I saw up well over 100, closed up only 41 at 1.17. The big winner, of course, again, was the small caps, up 60.88 or 3.7%, and running a close second were the transports. As you can imagine, all those airlines up 285.81, which reminds me that FedEx was down hard today, and I can't imagine that people are going to give up on ordering things from an Amazon who uses FedEx and UPS for the final mile of delivery. And it's not like the prices are not going to be in the same low area for those products at both of those. So again, that falls into the category of things that have been stressed and have succeeded. Um, on the NASDAQ, the internals were 2 to 1 up, even though it was down 181, and the volume on both places, NYSE, Amex, and NASDAQ, were substantially higher. I'm talking about maybe, I don't know, 40% higher than they normally are. But again, the close was pretty soft relative to where it was during the day. And I'll also remind you that we have been up over 3,500, actually closer to 4,000 Dow points since a week ago Thursday. So um, we're due for a little bit of a rest here. The big gainer in the futures area was the oil. Energy was massively higher. The oil closed at 40.29, up 315. The gold was down 97. Bitcoin was down, but only 180. The dollar was up, but only a half a buck, which puts it, nowhere near where it just broke down from. Was down over 200 basis points, and today it was up 49. And the big one is the chart on the screen, and that's the bonds. Um, they are back down in a very important area here around 170. I've pointed it out. I pointed it out in last night's letter that we tried to get back into this trading range in here, and we hit the high there, closed mid range, and then today was drastically lower. I mean, I don't. It's really hard for me to explain how big a move this actually is. In any event, it's down onto this longer term trend line. This is a weekly chart going back 3 years. So this is a pretty important line. And we'll have to see. It could easily hold. I mean, this area between 167 and 170 in here was the most recent breakout to the upside. So, coming back down to there after and closing higher, coming back down again and testing it and not quite making it down to that level and moving higher, uh, you know, it's a pretty important spot. All right, everyone. I did absolutely nothing today. I put it out in the Discord room under the heading of "When in doubt, stay out," and I think that things will calm down. I also think, though, that you're going to see a little bit of a flight to safety because my guess is we're going to lop off about 1,000 Dow points in here. And frankly, that would only put us back to last Thursday's level. So that's not a big deal. But a 25 or 30% correction after a move this extreme is normal and expectable. Let me just show you what I'm talking about here. We'll go to the S&P. And we'll go a little closer in. And this is the move that we've had in the last 5 days. We went basically from this double bottom here at 32 and change, 32 and a quarter, 32.30, to a high today of 36.68. That's a 300%, a 300 point gain in the S&P, and that's a solid 10% in 5 days. So be careful out there. You can do whatever you want as long as you keep the position sizes appropriate for your degree of risk, because there's a lot of headline risk here, both upside and downside. All right, everyone. Sorry I ran long. Have a good evening, and don't forget to hit subscribe.